Alright guys, so good morning or good afternoon or good evening depending on where you're watching from. So once again, welcome to HackerFX Academy. So in the last video, in the last section, we analyzed this very pair, this volatility 25 pair is a volatility indices pair. You can see it on the Reef broker. So we analyzed this pair and we analyzed that this pair was going to buy. So I'm going to show you how we analyzed it and how it is going. So if you have not seen the previous video, I suggest you should. I'll drop a link in the description box below. Okay, so first of all, we combined our knowledge of price action and market structures to determine the direction of the market. So it's very simple actually. It's very simple. So the first thing we did was that we identified the trend using market structures, and we found out that previously the price was bearish. It was bearish from here. It was selling. It broke the previous low and started making lower highs. And lower highs. Okay. At this point, the price stopped making lower highs and reversed. So when it reversed, how do we confirm that price has actually reversed? So we confirm that price has actually reversed, has changed trend. There is a change of character. When the previous high that was created has been taken out. So this point here was the previous high that V25 did on high time frame before it stopped making lower highs. Now look at what happened. Price broke this low. Okay, price changed this low, broke this low, did break of structure and came back to this point and broke this high. When it broke this high, that was when we knew that price has changed character, it has changed trend. You don't have to bother about this high here. This high here was just on bearish trend, but right now we're not going to consider it, because even if price breaks it and did not break this one, we will still consider it to be a bearish trend. Okay, so but this time around price has broken it. So when it has broken this not the previous high, remember, this is not the previous high. This high here is not the previous high at all. This is not the previous high. The previous high is this one. Is this one here? Is this high here? Okay, very good. So now that we have seen that this price here is the previous high, and what happened to this previous high? Price has taken it out. You can see what happened. Here. Price came here, and moved, broke it. That's broken it. So when price broke it, it reversed. So price reversed back. This reversal is where we find entry. Okay, but I did not find entry here, but in case you were looking for it, this is where we have found entry. Okay, I did not have my eyes on it at that point, but look at what happened. It is also good that we waited. Okay, now when price got here, why did price reverse from here? I'm going to show you that in a minute, because at this point now price is going to be going all the way up, at least to this point, previous high. Now let me show you why price reversed from there. Now we'll use our, first of all, trend line. Remember, we are combining price action and our knowledge of market structures to find entry, supply and demand. Okay, so now we see that this is the first touch, this is the second touch, and this is the third touch. This is number one. This is number one reason why we are confirming a bullish move. Okay, now the second reason is we use at 61.8 our Fibonacci retracement. So some of you don't know how to use Fibonacci retracement tool. How we use it is that we use it in a trading market. You don't use it in a consolidating market. You only use it in a trading market. So now market is trending, it has broken, it has changed, it has a broken structure here. Okay, let me show you. Here was when price broke this high, it was considered a break of structure. Now when price broke this other high, the previous high of the bearish trend, it was not considered a change of character. Okay, this high here is considered a change of character. Okay, now we now consider this market bullish. Now when it is coming back, it touched the trend. Okay, now when it touched the trend, we now use our Fibonacci retracement to place the 0 down, place 100 down, right, and move 0 up. 100 at the low, 0 at the previous high. Now this is it. So our 0 is here. Okay, now this is how we find our entry using Fibonacci. So 0 will be up, 100 will be down. So we'll now look for where price, my point of interest is usually 1.8, because 1.8 most times corresponds to zones. Now we'll now look at that point, that 1.8 zone was a valid zone. Look at it, it was a valid zone. You see this zone? Let's look at this zone very well. This is a zone, this is a demand zone. Okay, it was a demand zone. That's why I marked it out. It's a demand zone. So price came there. This one here was also a demand zone, but not really strong. You see that price just swept it off. Okay, now this one now is valid because number one, it is 61.8 Fibonacci retracement level, and number two, it is a supply, is a demand zone, actually demand zone. So now if you go to previous price actions, you will see that price have reacted there before. Okay, so we are still on higher time frame. Now we assume that price has come here and has moved. So in my previous video, price was still going up, was at this point. In my previous video, price was at this point. At this point. So I now analyze that okay, the price was going to come down. Now how to find entry? Let's say you stop price here. Okay, you're not supposed to enter, start buying from there. You wait for price to set for you. Okay, so we now waited. Go to 2 hours. Okay, now we are done with this 1.8 on high time frame. Let's remove it. Now we'll go to 2 hours. So we'll go to 2 hours. We'll go to one. Let's go to 1 hour. Actually, 1 hour is okay. So look at how we found this entry. So if you don't know what the previous video, please go and watch it. The link is in the description box. So now we we use this trend line to map out the retracement. You see this trend line? This trend line was the retracement. We use it to map out the retracement of price. Somebody will think that this is a bearish. No, this is not a bearish. This is not a bearish trend. This is actually a small trend in lower time frame, 1 hour, and it's going back to where it is going to retrace from. So now it has touched 61.8 and on a trend line. Okay, it has touched trend line. Now our plan now is to wait for retracement. Okay, that's gonna hit the trend, and it has swept the trend a little and come back. So now coming back, we use number 1, we map out another zone. Look at zone here. See this zone? This zone is valid. Okay. Number two, we use Fibonacci again. Remember, for bullish trend we place 100 down, and put 0 up. We look at it as 1.8. 1.8 is here. You see, it has touched 1.8, and your stop loss will be at 70 or below the zone. Now look at our entry. Our entry is at this point, and price has started moving. It has started changing, breaking structures. It has broken this one. It has broken this structure here. See, it has broken this structure. This structure here has been broken. So we are now expecting price to buy. So TP1 should be here. TP1 should be here. Okay, this is a supply zone. That is why it should be on TP1. This is a supply zone on its own. So price goes from zone to zone. When price gets to that supply zone, it's going to drop a little. So this should be your TP1, but ideally your TP2 should be here. Okay, if you have TP3, we should be going up. Okay, but now depending on your grid or level, just take TP1 and TP2 and leave the market. So guys, look at what we have here. Look at this. This was the trade we analyzed in our previous section. We analyzed this trade. We caught this trade when this trade was still at this trend line. This trend line here. That's what we call this trade. You see, this trade was still around this trend line. We moved from here. But first of all, we analyzed how this trade was around this point in the first place. So we moved here, and it was around this point at that point when we were analyzing. So we analyzed that the trade was going to come down to this point. And how did you get this point? It was 1.8 we used, and there was a zone there. We saw a zone there on 1 hour time frame, 15 minutes. So boom, the trade has gone up close to TP. You see TP? You are very, very close to TP. In fact, you could as well decide to close your entry. You see, we also analyzed that this point was supposed to be your TP1. Look at what we have. Okay, 1:10. Sorry, 1:10 actually. We have 1:10 here. From this point to that point, this is massive buy. So guys, if you have not watched the previous video, please make sure you watch it. The link is going to be in the description box below, and make sure you subscribe and follow for more market analysis and tips for profitable trading. Thank you guys.